Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, and we're at the 21st of October, 2024. We are 15 days away from the U.S. presidential election, and whoa, going to be an interesting time. Is it a dead heat? Absolutely. Are the markets going to be volatile in front of it? That's typically what happens. I don't have a crystal ball, but it's what I'd expect. Do certain markets begin seasonality in front of elections? By that I mean, do they do certain things often in front of and right after an election? The answer is yes. So what I did over the weekend is I decided to do the dollar index. Now, because I'm doing the dollar index, you can also think, well, if you want to be against it, you're playing the short side of markets or the long side. Which way am I in the dollar, bullish or bearish? That's the big question. So when I did the report, I did it a bit different. Normally I'll show you bar charts of the weekly, the monthly sometimes, certainly the daily. Then I'll even give you price counts and some seasonality as to what happens. I went into this a lot different. We are dealing in this report in purely what happens pre-election from this point that I'm now at, right into the election of November 5th, what happens right after the election, then post-election, what happens then as you go into late November, into December, and right into the year end. So what I did is I went back on a 53-year basis, just looking for U.S. elections, and did the seasonals based on that in the dollar index. Then I went to the 25-year and then down to the 15-year to see how they all compare with it. So you're going to see all that. The report's up on the website at iraepstein.com. My name, iraepstein.com. And you can also move your cursor up to the top here. If you're watching this on a PC, the icon is there. It will go off Wednesday night. So you have Monday, Tuesday, Wednesday. That's it. Then the report is gone. I'll consider doing another report on something else at that point in time. So I hope you do take a look at it. Now, tomorrow, we're going to get data on Redbook. So they're going to come out with the retail sales. They have been hovering right at the 5.5% increase as you look at it. The Richmond Fed will update their monthly manufacturing sector numbers. We get the Beige Book later in the week. We're going to get flash PMI for service sector and manufacturing, so you're going to want to look at that. Those are going to be important. And we're coming in the month end, and before you know it, you're going to have a new jobless report coming at you, and the election. It's all fast, real fast. So I think a time that you buckle in and get ready for the action this offers. And people say, well, do you get active or does the market die off going into the election? No, the volatility picks up rather dramatically. Need proof? The dollar up 50 points today. So you saw all the currencies take a hit against it. Now tonight they're giving you a minor bounce. Why not? They took a beating today in many cases. And the dollar, that's a rather big move to the upside, pushing the 104 level. And on the downside, you're into the 108s in the euro. So this market flip-flopped on you there. Here's the other thing that's been going on. Bonds and notes have been adding yield almost a regular basis every week now since we had the rate cut of 50 basis points. It's made up what it cut. If you go back to where the day before the cut was made and where you're at right now, there was no cut made. You're back to those high numbers on some of these markets. So you've got to pay very big attention to what's going on. The market has wiped out that short-term benefit that you had, and now let's reprice something else. So what is that next something? What is the market going to do from here? On the energy market, we know what's going on in the Middle East. Again, looking at how Saudi Arabia has very lofty projections. Today they were talking again about where they see the market and where they're thinking it's going. I don't know that I'm in agreement with them at this point. And first of all, I can't project out to 2050, and they're trying to do that. How the hell does anybody do that? Here's what I can tell you. If stocks follow the way that they've always gone, they'll be higher in 2050, these indices, that they are now. I can't begin to tell you what companies will still be in them. Can't tell you what companies are around, but that's how they have gone. If you go back 100 years, you will see I'm right on that. But trying to make a real prediction, I don't see how you go out that far. I think you have a hard time going out 2 to 5 years. That's just me. All right. So as we take a look at the S&P, well, for tonight, for the week, we're down 0.18% right now. So a slight decline in the market. As you see how the chart was going, you're still very much in the sideways, overall sideways pattern. And today, you had an outside day to the downside. That is, you took out Friday's high and low, you closed lower. So now the pattern on the chart happens to be, if you go back to Wednesday, you had a higher high than you did Friday. You got lower highs, lower lows. You've entered a short-term downtrend unless you take out the highs of today. Did I say Friday? Today. Today you had the outside day down. So this would have been Friday. Thursday's the other high day. I said that wrong. I'm sorry. So that's what I'll be looking. If you can take out today's high, you sort of negate that pattern short-term. Where could the market drop if it falls back? Well, 58.32 is a number. You're sitting at 58.95, so it's a 60-point break. It could happen. So that's not out of the realm of something that could be totally out. Hey, Ira, you're not going to get that size big break. That's possible. And you're running into resistance against the upper Bollinger Band. You only stay over Bollinger Bands 5% of the time. That's how the algorithm works. That doesn't mean you can't push it higher and higher. We've seen that over and over in bull markets. So you don't go in there and say, well, it's only going to stay over at 5%. No. I teach this very clearly. You're not a seller at Bollinger Bands. You're taking money off the table if that's what you call selling, and you're in long, I agree, but you're not trying to pick a top off of it. And that's your resistance point. You can see the market's paying attention. Overshadowing all that is when momentum, which I use the slow stochastics, when it locks in and both the K and the D number, which are the red and the blue, are going sideways, totally sideways, over 80 for several sessions or more. That's called embedded. Until the red line closes under 79, I'm continuing to look to see the pros buy the market on breaks until that pattern is broken by the 79 settlement. You're overbought in the NASDAQ. Prior to embedding, if that's going to occur with a bullish embedded, you get overbought. That's where you're at. You have the swing line down. You have the bias up as you're over the 18-day average, which has been a good bellwether. That's where the market keeps finding its support. When you come to the Dow, you're flirting, one eye closed, flirting with losing the bullish embedded reading. Now, that number embedded when? Let's see if I can get it to come back on it. Yeah, here is today's settlement, okay? This is where we're at. Both numbers were over 80. The day before, they're both over 80 on Friday. The day before, they were both over 80, not the day before. So you had 3 sessions in a row, and then the buy would normally be, you're looking to come in, there's a formula that I give you as to how to do that, and you're losing the embedded reading. You're not looking to be a buyer. Could it recover later in the day? It could. But the way I teach it, no, I'm not telling my traders to buy there. The Russell just got overbought, went to the Bollinger Band, probably going to fall back to regroup at or very close like it is right now to the 18-day average of closes. But here's the markets that have been bearish, and they're being dominated by the embedded reading. You flirt with losing it, and then you grab it right back, and you keep driving this market down. The same has been happening in the 5-year. Now, the market that's different is the 2-year, but that's the one most sensitive to whatever the Fed's going to do, and it wasn't with the bearish embedded reading. The dollar has a bullish reading here. This is as strong a reading as I know. So I'm looking for the market to break out to the upside from that. If that's occurring, then the euro is probably going down and might even want to come into this area, the 107 area, before all is said and done. In the British pound, I told you I expected a battle at the 100-day average of closes. You don't get much closer than this. You're 10 points away from it. And that's where I see the battle. Now, if that gives ground, then the next battle zone is 128.63 to '09. If you cleared 130.70, you probably have seen the end of this break for the moment, and the market's going to do whatever it's going to do as it gets ready for the Bank of England to set up what they're going to fight with. I think they're going to cut rates. In Bitcoin, you keep going to the upper Bollinger Band, and you nosedove today with an outside day to the downside, and you're not embedded. So the market's acting as though, okay, maybe it's not a continuation pattern against that upper Bollinger Band, and maybe the market backs off a little bit here. As we come to the energies, oversold. So you've come down pretty hard. You're down in the market, if you really look at it, almost $11 a barrel or so, $8. Let's see, up here would have been 80 to 72, about $8 a barrel. That's quite a bit. When you take a look at what you've done in WTI from roughly 76 to 68, the same thing, that doesn't mean you can't go lower. You know, I was talking a while back that mid-60s is reasonable for our WTI. Well, we're just about there. Not quite. We're at 70. That's not mid-60s. You've probed the 68.5 zone, but that's not mid-60s, as I call it. In the heating oil, I'm waiting for when cold weather is going to set into the U.S. The market will tell you, and the heating oil demand will begin. Chicago today, 84 degrees. Our normal is 61. So we're basking in warm weather all week long. It won't be 80s the rest of the week, but certainly the neat 70s, high to mid 70s. I told you, it's a beautiful time to visit the city at this time of the year. You get surprises sometime, and this is one of them. Lower highs, lower lows in natural gas. You're getting a bounce. You have an embedded reading. I expect to see pro-selling if the market can extend this rally another day or so. So you put it together, you come up with a game plan, you try to assume what it is, try to get to where it's at, and what I try to do is work with you and give you special reports from now and then, and this one's on the dollar. It's there on the website for you to view. Go to iraepstein.com. You'll see it on the top left, or move your cursor up here. With that, I'm Ira. You have yourself a great evening. Take care.